down about 80-odd points for the Nifty. The Sensex is down about 300 points.
Benchmark indices are down close to about 0.6, 0.8% gone on Nifty as well as Sensex.
Weekday in trade, and mid-caps, they are the ones which are underperforming the benchmarks as well.
The low today, by the way, was 17,993. We had highlighted 18,000 as a strong support. So almost got there, 83 points higher, 18,200. So we're going to leave off practically at the day's highest point.
We left at the day's highest point, and what a stellar recovery the market showed in the last hour. It was December series expiry, the last FNO series of 2022. And while the series belonged to the Bears, the last day definitely, and the last week belonged to the Bulls for sure. We opened lower, and thereafter we saw a near 200-point recovery from the lows on the Nifty. Hello and welcome. You're watching us here on Markets Today. This is a show where we track 6 hours of trade in 5 headlines. Let's talk about those headlines. Indian indices stage a dramatic recovery in the last hour to end with gains. Bank stocks lead the charge with the Nifty Bank gaining 800 points from the lows. Mid-caps underperform while the market breadth improves, remains neutral. Reliance chairman Mukesh Ambani lays out targets for various businesses in his annual address, wants Jio to connect the globe, Reliance Retail to reach all Indians, and the new energy business to transform the world. There was litigation reprieve for Dr. Reddy's. It gained in trade, closed just above the flat line. The company says all claims against it pertaining to the Revlimid generic have been withdrawn. SBI chairman tells CNBC-TV18 that credit growth won't be impacted by rising interest rates given strong demand and a likely peaking of inflation, adds that the comeback of contact services is a big driver. And in stocks making news, Shriram Finance slides 5% after 17.5 crore shares list post-merger, causing excess supply. Spandana Spurti gains on selling bad assets, whereas sources say Bharti Airtel is looking to list its Airtel Payments Bank. Market stages sharp recovery on expiry date to end in the green, and how a near 200-point recovery for the Nifty, over 800 points for the Nifty Bank, the Sensex closing over 61,100. So let's take note of the market itself. For the December series, we saw a cut of over 1% for the frontline indices. The mid-caps and the banks outperformed to end with gains. Prashant Nair joins in with the granular details.
A solid pullback from the day's lowest point, and it looked dramatically different by close. It's compared to the bulk of the session. Most of the move came in the last 60 minutes of trade. It was also, of course, futures and options expiry. The Nifty doing very well, ending practically at the high point of the day. The surge was powerful. Banks even better, and the Bank Nifty intraday sharp spike in the last 60 minutes was something to be seen. Broader market pullback, but the pullback as compared to the Nifty or the Bank Nifty was a little more feeble, but they ended higher. Large cap gainers included names like Bharti, iShares, State Bank of India. Nothing outsized, I mean, in terms of day-on-day returns, but there was a broader push higher that we saw. In the broader market, I mean, the action was action also actually changed in the last 1 hour. It was negative advanced market breadth when we started at 230 in the last hour, and it flipped to slightly marginally positive advanced decline by close. The Adani Group stocks on your screen all rallying. Names like Fact, Sharda Crop Chemicals, recent listings like Nykaa, BKG, Inox Green doing very well. KEC, AG's Chemicals, Skipper, BEML were some of the names which stood out. There were losses as well, but what went up, and that list of stocks which went up was a lot longer, and it went up with volumes, and I think that's what matters. Shriram Finance was lower, Shree Cements, Amara Raja, Kalyan Jewelers, Saregama were some of the other stocks which actually ended lower. Tomorrow, of course, is the last trading session for 2022, and it in a way has been uncharacteristically alive, the market. I mean, you know, while volumes have been lower, and that's to be expected, but price action has not been dull. The Nifty now sits exactly at an important rising trend line all the way from the lows of June, which is at about 18,200. A clear break above this level, I think, opens room for more upsides. Back to you.
Let's move on to some market opinion. The focus is more on the liability side than the asset side. That's the word coming in from Nilesh Shah, Managing Director at Kotak Mahindra Asset Management, talking about the banking sector. In fact, he spoke with us on a whole host of topics, and with the markets, he believed that there could be a revival of EBITDA margins in the next couple of quarters. Let's listen in.
The overall liquidity in banking system at the beginning of the year on 1st April, it was about 8 lakh crore. And then over a period of time, it kept on dwindling at about 2 lakh crore. Now, clearly, when liquidity becomes scarcer, then obviously there will be scramble for deposits, there will be higher interest rates. So my feeling is that right now, from asset side, market will focus on the liability side of the bank. Banks with better franchisee, better ability to raise deposits at a lower cost will do well. This year, the gap between return of equity fund and a debt fund will be fairly narrower. COVID impacted EBITDA margins. Clearly, there was a hit on inflation and there was effect of slowdown at the bottom end of consumption. Our feeling is that in December 22 quarter, the hit taken thanks to the stock correction coming in will be over, but the volume growth is something which we will be critically watching. Clearly, the market is discounting rebound in the EBITDA margins to June 22 quarter level rather than sustenance of September 22 EBITDA margin levels.
Right, so that was some opinion coming in from Nilesh Shah. Let's also stick with market opinion. Cameron Brandt of EPR Park Global says that the market is in uncertain space about growth in the first quarter of the coming calendar year. He also believes that emerging markets will continue to see strong flows.
Considerable uncertainty about where we're going on a broad front, certainly into the first quarter of next year. We obviously seeing, as we nearly always do, a certain amount of sort of window dressing, tactical position, year-end positioning, which has actually been to India's benefit. Your stock market is one of the few that looks set to end the year with a net gain, and we've been seeing some money move to take advantage of that. In the emerging market space, we're continuing to see a willingness to look past the COVID turmoil in China to the rebound that people are hoping for. So strong flows there.
Let's talk about the second headline now. Speaking at the Reliance Family Day, Chairman Mukesh Ambani laid out targets for each of the conglomerate's businesses. He assured that Jio's 5G rollout will be complete by 2023, and with the addition of new energy arm, Reliance is on the path to become India's greenest corporate. Listen in.
5G network across India at a pace which is faster than anywhere in the world. Jio's 5G deployment will be complete in 2023. Since every single village will have 5G connectivity, India has a historic opportunity to completely erase the rural-urban divide. Like Jio, the growth of our retail business will also have a cascading effect on India's inclusive development. All of us are excited about the media and entertainment business and its integration with digital services that will reinvent the entertainment industry completely. We are making rapid progress in getting our gigafactories in Jamnagar ready. From being India's largest and most valuable corporate, Reliance is now well on its way to also become India's greenest corporate. 2023 will also be a year of renewal and revitalization for Reliance Foundation.
On its way to becoming India's greenest corporate. So that's the big headline coming in from Mukesh Ambani's speech at the Reliance Family Day. Let's talk about the third headline then. Dr. Reddy's opened higher today after it said that all the claims against it pertaining to the Revlimid generic were withdrawn. However, the stock ended flat. Remember, the company, along with innovators like Celgene and BMS, were accused of restraining competition. Sonia Shenoy standing by with the details.
Well, thanks a lot for that. It's a positive development coming in for Dr. Reddy's. As you rightly pointed out, they have mentioned that all the claims with regards to Revlimid generic complaint has now been dismissed. Revlimid generic had been named a defendant along with Celgene, BMS and several other generic companies. And now the company says that the Revlimid generic complaint defendants has been improperly restraining competition, and they've maintained a shared monopoly in the sale and the brand. Now, the plaintiffs have have voluntarily dismissed the company from the case, and hence that provides a bit of a relief for Dr. Reddy's. Hence, the stock is trading a bit higher. Back to you.
Right, from pharmaceutical to chemicals, a Nirmal Bang report indicates that the chemical sector's M&A transaction value between January to September has actually been around $3 trillion, just under that actually. Sonal Bhutra joins in with the details of all the M&A activity in the chemical space.
In terms of numbers and what it means for the future transactions that some of the players are planning to undertake. So as per the data, M&A transaction value has declined to around under $3 trillion versus $3.7 trillion. This is on a YOY basis. Out of this, healthcare and pharma had an 11.4% share, which is around $350 billion in terms of value, and oil and gas at 8.9% share, which is around $273.3 billion in terms of value. Now, there have been large deals. Large deals mean something above $5 billion. They were around 58 or at least 10% of the global M&A deals that we saw in this particular sector as well. The recent one, of course, is that we've been talking about Advent taking over Suven Pharma, which implied a business valuation of FY23 EV to sales of 9.5 times. Now, what does that mean for any other company which is looking at an acquisition? PI Industries is case in point. They have been telling us that they are looking at a pharma player, they are looking at an acquisition. So if we take this particular valuation as the parameter, this will pose a challenge for PI Industries because they may have to pay around 9,500 crores to 19,000 crore rupees for a 100% buyout of a similar asset. That is this one that is the kind of Suven Pharma. And this will mean that they will have to leverage their balance sheet as well. In fact, they have interestingly put out names of companies which are looking at an acquisition. There is UPL, PI Industries, Sumitomo, Coromandel International. All of them are looking for an M&A. Barring UPL, the rest of them are net cash as on FY22. Now, UPL is looking for smaller deals, say under 200 crore rupees each for both seeds and crop protection services segment. They've put out an interesting table as well, where UPL is looking at seeds and services as their possible M&A interest. They have a net debt of 18,900 crore rupees. PI Industries, which is net cash right now, is looking at CDMO and API. This is something that they have told us. Sumitomo is also net cash of around 435 crore rupees. They are looking at crop protection businesses or services. And Coromandel also, which is net cash to the tune of 3,300 crore rupees, is also looking at crop protection business for acquisition.
All right, interesting data there. So maybe a lot of companies will have to shell out a little more basis the latest deal that happened between Suven and Advent. With that, we'll slip into a short break and come back, talk about all the other headlines that we're tracking today.